Hello, I'm Andrew Betwain, the managing editor of insuranceinvestor.com, and today I'm joined by Steve Matthews, who is the fund manager of liquidity at Canada Life Asset Management. Hi, Steve, how are you?
I'm very well, thank you, Andrew. Nice to see you.
Thank you for being here. So, Steve is going to be speaking at our Investor Insurance Live event in the end of the year on the 3rd of November in London. He will be on a panel discussion on emerging liquidity in cash and tools, where to go outside of bank deposits and asset-backed securities, fund financing, and commercial bank debt. So, a really interesting topic there with lots to discuss and lots of angles. So, I'm going to dive straight into my questions, Steve. Can you talk us through the current liquidity situation in the market, especially the challenges that we're seeing?
Well, there are lots of challenges at the moment. I think the biggest one that we have is just how far are the ECB going to hike rates and how quickly. So with those two questions in the backdrop, the ECB, so the commercial paper market is somewhat drying up. We've seen plenty of people coming into the market with rates, but not necessarily not necessarily deals that get done because they're looking for larger lumps and smaller investors need to club together. So what we're seeing in the secondary market for commercial paper is that the inventories are reducing, and because the banks aren't willing to take on positions in case they start losing money by the banks increasing rates Bank of England increasing rates quicker than previously expected.
And so with all those factors going on, it sort of leads me on to my next question, which is why is it important for asset managers and investors to have a good secondary plan for securing liquidity? What are the key factors there that you would put as most important?
Well, this precise situation that we have at the moment can mean that you are unable to take on the type of assets that you want within your portfolio. So what we kind of find is that you get the same names coming up again and again. So you reach your limits on those names. So you need to have opportunities to invest in other names. Now there are opportunities to invest out to a year with certain good names, and when these come along, we can take a small punt on whether or not interest rates are going to hit 3% by next year, or whether or not this is so add a little bit of value into the fund, add a little bit of yield. But what we're also looking at is to buy AAA rated sovereigns, supranational agency assets. So you've got very high quality assets there with a small bit of the spread and always an active market. So if you need to sell those assets.
So you've mentioned there our current situation, which segues nicely into question 3, which is, so in the sphere of the overall world we're in with cash, liquidity, capital requirements, where do you see us heading in 2022 for the rest of the year? And we'll be able to check this when we get to November.
Yeah, so this is the moment of truth. I see that the markets are pricing in another 1.75% of rate hikes before the end of the year. Personally, I feel that's over-egging it a little bit. But against this backdrop, I see liquidity issues remaining. I see a challenge for investors to pick the right path through the interest rate environment we see. I see December again being a tough month for liquidity as the banks start to get into position for year end and their capital requirements at that time, which is always a particularly challenging position for us. I think the way forward is to keep your portfolios as short as possible. Take a couple of punts to produce a little bit of extra yield without taking on any unnecessary risk, and continue with diversification.
Mm. So my final question, I'm going to circle back to the main point of the debate. Can you give us your thoughts on asset-backed securities and fund financing in this current situation that we're in?
Well, we're not specialists in ABCP, so it's not an area that we do focus on. But we do see the benefit in having secured assets, and so a large part of our portfolio is invested in covered bonds, and these will be through floating rate notes and fixed income assets. So the floating rate notes are perfect in this environment for us. So you can buy AAA rated assets with without the market risk of perhaps tying into something that's going to look very expensive by the time it matures. So we see these are important tools for liquidity. If the commercial paper market is a little bit quiet, then this is another route along with the SSA assets to provide high quality, highly liquid assets within the fund.
Really interesting topics there, and some really interesting stuff for us to get our teeth into at the event in November. So thank you, Steve, for your time today. It's been a pleasure to speak to you. And if you found what Steve was saying interesting, which I'm sure you have, he will be speaking at our Insurance Investor Live Europe conference on the 3rd of November in London. Thank you, and I hope to see you there.